What is going on, guys? Welcome to my YouTube channel and welcome to this special video that I have for you, how to day trade like Sun Tzu. So it sounds interesting because day trading has definitely not been around for 2,000 years, but trust me, by the end of this video, you're going to come out smarter and better than you were at the beginning. All right, so check this out. All right, so if you don't know who Sun Tzu is, or if you've never heard of him before, Sun Tzu was an ancient Chinese military strategist, philosopher, and the author of The Art of War, one of the most influential works on military strategy and tactics. He is believed to have lived during the Eastern Zhou period around the 5th century BC in the state of Wu. Sun Tzu emphasized the importance of strategy, adaptability, and understanding one's enemy and oneself to achieve victory with minimal conflict. That's important. His principles extend beyond warfare, influencing fields like business, leadership, sports, and personal development. So, The Art of War, right, by Sun Tzu. Here's my copy. I have that middle one. It's not very long. This one's actually longer than it needs to be because it comes with commentary, a lot of commentary, actually. So, the middle one is the one I have, but since this is pretty ancient, it's so old, just like the Stoic text, just like Meditations from Marcus Aurelius, there's going to be different variations, different versions. These are 3 popular ones on Amazon, but again, I have that middle one. If you want the one that I have, I'll put the links down in the description. All right, so point number 1, he says all warfare is based on deception. So what does that mean for traders? Well, I've taught market manipulation for the longest time. I have so many videos on that. But in short, the market goes higher to go lower, meaning if it's going to go down, it's going to go up first typically, and vice versa. If the market is going to go higher, it's typically going to go lower first, like taking out a previous low, previous day's low, something to that effect. All right. Television and social media leads the public in the wrong direction. If you've never heard of exit liquidity before, you were probably exit liquidity is basically you're buying at the top, and that's not what you want. You want to be selling at the top, not buying at the top. Moving on to number 2. In war, let your great objective be victory, not lengthy campaigns. So that means, in my opinion, to preserve mental capital, right? Don't hold losing trades. They will become larger losses. And don't spend all day in front of the charts because that's going to be expending mental capital. Now, if you don't know who I am, I do spend a lot of time in front of the charts, but I'm in my 11th year as of 2025. You know, I know what I'm looking at. I know what I'm looking for, and I enjoy it. So I don't mind spending all day in front of the charts. I can not take a trade, but it did take a while to build up to that. But for most people, probably shouldn't spend all day in front of the charts. Number 3, he will win who knows when to fight and when not to fight. So for traders, to me, that means knowing when to trade and when not to trade. Also, be aware of characteristics of unfavorable trading conditions. So one thing about Twitter, man, all the time I see people, oh, this is low probability conditions. You shouldn't be trading this and that. To me, I can find some unfavorable conditions for myself, sure. But like I said, that's for myself. Almost every single time the Twitter community says, oh, this is unfavorable, I'm usually taking really, really good trades. So unfavorable to everybody else might be favorable to you. So you have to figure out what those characteristics are for you. All right. Not jumping into a trade before high impact news. Moving on to number 4. If you know the enemy and know yourself, you need not fear the result of 100 battles. So allow your edge to work out over time. If your edge works well, allow it to work out over time, even through those losing trades, right? Very similar to Mark Douglas, right? Trading in the zone, disciplined trader, although a lot more modern, right? Mark Douglas talks about the series of trades perspective. So in other words, not putting too much emphasis on one or two trades. Number 5. Military tactics are like unto water. For water in its natural course runs away from high places and hastens downwards. So in war, the way is to avoid what is strong and strike at what is weak. So what does that mean for traders? Relative strength. Okay. Now, also in the sense, if you are familiar with smart money concepts, if you're familiar with market maker models, aka MMXMs, what I'm looking for is a low resistant run on liquidity, which is typically going to be the second stage or the second leg of a market maker buy model or a market maker sell model. Right? And relative strength, we want to be shorting weak markets and we want to be longing the stronger markets. It's just more efficient that way. It's easier that way. Number 6, ponder and deliberate before you make a move. So don't trade blindly or randomly. Follow your trade plan, right? In today's world, we can print things very easily. So there's really no need or no excuse to not have a trade plan, right? What your strategy is, when you're going to trade, why you're going to trade, where you're going to enter, stop loss placement, risk management, all that type of stuff, right? So you shouldn't be just willy-nilly out there doing things. You should be following that trade plan, right? Slow down. Think about what you're going to do before you do it. And I think we've all been there before, right? Before we're going to take another trade, even though we've taken 2 or 3 losses, we want to revenge trade. And typically that does what? Makes things worse. If we would have just slowed down and thought about what we were doing before we did it, we could have saved ourselves some heartache and, you know, that blown account, that blown combine or funded challenge or whatever. If we would have just thought about what we were doing before we did it, you know. Number 7, this is a little bit more complicated just because there's so many parts to it, but I've color coded it for you to help you follow along. Number 7, there are roads which must not be followed, armies which must not be attacked, towns which must not be besieged, positions which must not be contested, commands of the sovereign which must not be obeyed. You might think, well, what on earth does that have to do with trading? Well, that's why I'm explaining it to you. All right, so that blue part, don't follow every market or asset class. There are roads which must not be followed. Also, avoid chasing trades that don't align with your trade plan or risk tolerance. Armies which must not be attacked. Avoid unfavorable market conditions or assets too volatile for you or too slow for you. Towns which must not be besieged. Not every trade setup is worth taking. Avoid letting bad trades run and hold good trades, right? That's from that red portion. Positions must not be contested. And that last part, commands of the sovereign which must not be obeyed. Resist the temptation to follow the crowd / hype and stick to what works for you. All right, moving on to number 8. The general who advances without courting fame and retreats without fearing disgrace, whose only thought is to protect his country and do good service for his sovereign, is the jewel of the kingdom. So, trade for yourself, not social media. Don't be afraid to not trade, right? In other words, it's okay to sit out, right? You can retreat without fearing disgrace. You can look at the markets and not take a trade, or maybe go over into demo if you're not too sure. There's nothing wrong with that. All right, protect your capital and focus on trading well. Number 9, the last one. If the enemy leaves the door open, you must rush in. So if you see an opportunity, have the courage to take it, right? We've all been there, I'm sure. We see a setup, but we hesitated. We knew like, this is going to go higher, but we didn't long. Or we knew it was going to go short, but we didn't take a short position, right? And we lacked that courage to pull the trigger on that idea. All right. So what we want to be is not reckless, but calculated, right? Who was it? Aristotle that said courage is the midpoint between cowardice and recklessness. Because with no courage and you don't do anything, you're a coward. But if you have too much courage and you act without being deliberate or you act without thinking, you're reckless. So again, we don't want to be reckless. We want to be calculated. All right. And there you have it. So in summary, recognize and understand deception to prevent being deceived and or take advantage of deception, i.e. market manipulation. Don't waste time in front of the charts for too long or holding losing trades for too long. Trust in your strategy that has been proven to work over a long period of time. Remember that series of trades perspective. Buy strong markets and short weak markets for the greatest efficiency, the easiest trades. All right, take your time. Don't be in a rush. And again, not slow, but deliberate. Focus on your own trading and don't worry about what everyone else is doing. Have and practice the courage to take trading opportunities that meet your criteria. All right. And that is going to be it. So thank you guys so much for being here. If you got some value, drop a like on the video. I'd greatly appreciate that. Any questions, comments, concerns, leave me a comment down below. I will respond back to you. And if you really want to become a part of this community that we have here, the SMS community, it's only $25 a month. You can join by clicking the join button down below. You can get into our Discord, right? We do market reviews 2 times a week and some other cool stuff as well. All right. So be blessed and I'll see you in the next one.